What's going on, investors? It is AK from Fallible here, and today I want to talk more about options. Specifically, the pitfalls of options. Pitfalls. These are pitfalls that you need to avoid because no one likes falling into a pit. The worst is when you're playing basketball and someone jumps up for the same rebound as you and you accidentally fall into his pit. Oh, gotta avoid the pits. So that's what this video is gonna do, except not in basketball, but in options. And once again, we will use the help of my very smart pal, Tyler at Macarops. He wrote this article about the misconceptions and pitfalls of options, which if you haven't read, I will link down below in the comments or wherever. But before we jump into that article, if you haven't already, make sure you sign up for our free options trading guide. It goes really in depth on options and it covers things that people just don't know. This is a guide that Tyler wrote that taught me a ton about options too. There's a lot to do with volatility in here and how that affects options pricing, which if you don't know what I'm talking about, well, definitely get the guide. I'll put a link in this video and down below. Just go to that page, enter your email, and we'll send it to you for free. But okay, pitfall number one, false confidence and the folly of sophistication. So Tyler says false confidence in anything is dangerous. This is especially true in options trading. It's a silent killer that leaves its victims demoralized and broke, slamming drinks at the local bar, wondering where it all went wrong. Tyler's go-to example for anything involving trading losses is going to the bar and slamming drinks. It's pretty funny. I think it's in most articles that he writes. So if you're ever in Austin and you see a guy at the bar just slamming whiskey, talking about how bad a few trades went, well, then that might be Tyler. Great example. But anyway, so Tyler talks about how this false confidence and sophistication starts happening when they jump into the options market. Because when it comes to options, you know how many different types of options there are, and spreads especially. He has a list here. There's put spreads, call spreads, vertical spreads, iron condors, butterflies, iron butterflies, straddles, strangles, calendar spreads, ratio spreads, back spreads, covered calls, diagonals, double diagonals, combos, collars. All these stupid fancy names that get investors really excited. I remember my dad telling me about iron condors when I was a kid. And every time he said iron condor, I would always think about that bird in Power Rangers that helped build the Megazord. Wasn't that an iron condor too? And then hearing about my dad trade butterflies when I was little, well, that was too funny. Of course I was laughing at that. Clearly I was not mature enough for options trading. I am now though. As Tyler says, most of these option spreads are just BS and they don't matter unless you're an options market maker. And that's obviously not what the gurus tell you, because the gurus pitch all this stuff at you, get you excited. They even make up their own names for proprietary spreads, but it just becomes a waste. And what happens is a new trader, when they first see all these things, like I said, they get excited. And the first task becomes memorizing what all these names are and a little bit of what they mean. And as soon as a person finishes doing that, they feel like they're an expert, because then they could go talk to their friends and be like, hey, I just released an iron condor into Apple, and that iron is about to turn into gold, baby. Options. See, but as Tyler says, this is where the danger begins, because option spreads are very complex. Just knowing what they are is not nearly enough to be successful using them. But what most beginner traders do is take that basic understanding and just start firing off option spreads, and they just overtrade and they just lose. And Tyler says he knows because he did the exact same thing in his own options career. It's basically what everyone goes through. I remember doing calendar spreads and just jacking them up, but I thought I was doing a really good job, because the thing about options is they can get so complicated that you can't even tell what your results are. So you might think you're doing well when you're actually losing. So as Tyler says, sophistication and complexity do not imply an edge. In trading, the opposite is usually true. A simple process is more likely to have persistent edge than a complex process. So this issue and this pitfall of options is really not just something that happens with options. It happens with everything in the market. People think that complicated equals better, when that's just not true. So a lot of times you could look at someone's price chart on their charting platform and kind of see what type of trader they are. Is the pattern chart clean, or is it just a mess with 1,000 different indicators on them? If it's a mess, well, then that trader probably doesn't know what they're doing, but they probably think they know what they're doing, just because again, people think adding more and more makes something better. It doesn't. And like I said before, the problem with a super complex process is that you're not even able to root out the proper results. Like, you can't analyze something when it's that complex, because one of the biggest things you do in trading is carry out a process and then look back at the results. process. It's like looking at game footage. You do that most of the time. But if your game footage or your process is so complicated, you're not gonna know what's going on. It was like me and those calendar spreads. Are you winning? Are you losing? But okay, maybe most people can identify if they're losing. But once you see that you're losing, if you got like 50 indicators on your chart, or if you're using some super complicated option spread, you're not gonna know what factor is contributing to the loss. It's like a freaking knot. How are you gonna pull out the things and make sense of them? It's a mess. That's why I always try to go with the most simple process possible. And to make a process better, normally what I'm doing is just cutting stuff out. You don't need to try to add complexity to anything. It just automatically creeps in. So the smartest traders and just people in general are always trying to cut through that complexity. Simplify, simplify, simplify. And there's this concept of simplicity on the other side of complexity. So when you first start out in something, say like options, okay, you think it's pretty simple. So you buy a call, you know, it's the right to buy this many shares of this. Okay, makes sense. Then they start creeping into the complexity, which is what we talked about, you know, the iron condors, the butterflies, the super rhinoceroses, whatever the heck spreads are going on. And in that area of complexity is usually where most people screw up and fall out. They lose their shirts and they're out of the market. But if you can move through that and move back to simplicity on this side, simplicity on the other side of complexity, you will be narrowing down to the stuff that actually works. So like in the NASDAQ All-Stars, the way we use options in that is pretty simple. We're buying just a simple call option that's out of the money on a high momentum stock. So we're trying to take advantage of two anomalies in the market. One being momentum, and two being the inefficiencies in the Black-Scholes model to be able to calculate that momentum, which is why we're buying cheap out of the money options, which tend to give us a really good return because it's not accounting for the momentum. So we went through that process and ended up on something way more simple, and that's why it's effective and it works. And by the way, if you want to learn more about that NASDAQ All-Star system, I'll put a link to a video I made that describes it more. You can check that out. So if there's one thing you can do to avoid getting screwed over in options, is just don't be tempted by that sophistication. You're not going to make more money just because your thing is more complicated. That's not how markets work. It's not how life works. So don't fall into that pit. And if you want to learn more about options, like I was saying before, definitely sign up for this guide. Just enter your email and I'll send that over to you. Now I'm going to keep talking about options in future videos. So if you want to see those, subscribe to this channel and hit that bell so you get an email notification when those videos are released. We're publishing every single day now. So subscribe and I'll see you in the next video. Stay fallible out there. Bye.